Let's talk reverse mortgages today, as the landscape or the stigma behind them has shifted over the years into a more desirable product for the aging market of homeowners here who need some options. So let's start with number one, non-recourse. It is now impossible for you to go underwater on the home to the point where the bank comes out and says, we're either taking the home or you got to pay for the difference. So non-recourse through FHA, they're federally insured nowadays so that you can't be put in that position, and typically the calculations they put forth avoid that to begin with. Number two, you get a line of credit with it. Just like a home equity line of credit, these are also called home equity conversion mortgages to allow a line of credit for you to utilize however you'd like. Could be repairs, could be personal venture, could be lifestyle. Doesn't matter, but it opens up the ability for you to have a line of credit without actually paying for it on a monthly basis if you would not like to. Number three, we can make a payment or we don't have to. That's the beauty of it, depending on what kind of income scenario you're looking at when you get to that sort of retirement age. Some of us are only on Social Security. Some of us have income from other areas of life. And so you can make a payment if you'd like to, or you don't have to, and you can allow the balance to accrue over time. It's also good for upsizing or downsizing. You can actually qualify for more of a house using a reverse mortgage than you would to typically qualify. Going back to the income that we just talked about, oftentimes if you're only on Social Security, it's hard to qualify for a home that's $400,000, $500,000, $600,000. But if you sell a home or get ready to do a reverse purchase and you have $200,000 or $300,000 to put down, you could potentially get into a property in the neighborhood of $800,000 to $900,000. So if you know somebody in your life who is coming up on that age, 62 is typically when this begins. At least one of the partners has to be 62 for this to work. Maybe it's time to open up that conversation. These aren't as scary as they used to be, and there's a lot of misinformation behind them. They are now very polished products that give options to people out here who own real estate.